Are you still thinking about investing your money in 2025 the way you did in 24 or 23? Well, you might be walking in a trap. And that is what I'm going to talk about today. Whether we should have a risk on or risk off in 2025. How am I looking at the market? How am I interpreting all the noise and trying to make my own personal investment decisions? So I'm going to be sharing that entire story with you today. And we talked about this quite a bit in our discussion call. If you guys remember, if we do this every month and we talk about what's happening in market and we try to address some of the common questions that everybody has. So if you want to join that call, you're welcome to do so. Just reach out to me and I'll give you the link for our next Zoom call. It happens on a regular basis. All right. Before I begin, let me remind everyone that number one, January 15th is our deadline for estimated tax payments. So that is due. So please make sure you get that done. If you're not, you're going to run into some penalties there. So that's number one. Number two is BOI report. We still have an injunction on BOI report, so we're not required to file it right now, but that can change. So we don't know what will happen. Right now, it's still available. You can go on to FinCEN website and you can voluntarily file your BOI report if you don't want to deal with the headache later on. So those are the two major updates right now. Third, obviously, if you want us to help you with your tax return, just reach out to me via taxcodeadvisors.com, or better yet, just book a 15-minute free discovery call. We'll jump on a call. We'll take a look at all the documents you are. We'll give you the price you file, sign the engagement letter, and we'll get on top of filing your tax returns right away. So that's all the updates right now from a tax world. All right, I'm sure we're going to have a lot more once Trump takes office, but that's what we have for now. As far as the financial markets, now, before I begin, let me remind everyone, I'm not an investment advisor. I'm not here to tell you what to buy, what to sell, when to buy, when to sell. Absolutely not. I'm a tax advisor. I help clients file their taxes, help them come up with strategies to reduce their taxes. That's what I do for a living. I'm not here to tell you how to make your investment decision. However, I do like to share how I look at things. So that is what I'm going to do for my community. I tell them everything. What am I doing? So that way you're aware of. A lot of people say they made big bets, but they talk about it afterwards. So you don't know if that was really them or not. But here, I publicly tell you, what am I doing? How do I look at the things? So that way you can evaluate me. You can say, hey, does this guy make sense or not make sense? It's open in public. So anyhow, that's what we do on the discussion call. If you want to hear all that, just join them and you can judge for yourself. So let's talk about the mindset in 2025. Now, I'm going to go a little bit fast during this video because in the discussion call was like almost 3 hour long. So we talked about a lot of things there. I'm going to eliminate a lot of little things and just kind of focus on the major points. So that way you guys don't have to spend 2 hours listening to me. Hopefully we can wrap it up in 15, 20 minutes. Okay, number one, a lot of people are in a lottery mood right now. You guys remember at the discussion call, a lot of people were talking about companies that are not profitable. They don't have revenue. They don't have sales. They don't have profits. They don't have any cash flow. They're just in negative. And the idea is when if these companies work out, they can generate a lot of money for people, and they could. But again, I'm hearing those kind of stories more and more. Like every few days, somebody's talking about a company that is going to be next Tesla or next Nvidia. And when people start talking like that, it really gets me worried. That was, I was okay when people talk about, Google going to do well in 2 years or Microsoft going to do well or Tesla going. I can accept that. But when you're talking about a company that has no revenue, no cash from operations, they barely making their ends meet, they have no sales, they're just too early for me. And right now people are once again starting to look out for those kind of companies. That is starting to get me worried. Another thing is people are having some crazy expectations. Every time I'm in a call, people are talking about, oh yeah, markets are great, they're going to do another 20%, 30%, 40%, all kind of ridiculous number. And even for individual stocks, people are talking about, oh, this company is going to do X, this company is going to do Y. Some people are talking about 300, 400% return. Now, is it possible? Yes. Did I invested in some company that did that? Yes. But that is not normal. Maybe you invested in 4 companies and one company did that. But chances of you picking 5, 6 companies that can do that kind of return is just not right. And you can see that the very same people who talk about these companies, when market goes down by 2%, 3%, 5%, they start to panic, and now they're like, oh my god, the market is going to crash, the whole thing is going to come down, and they start to get a lot of panic in the market. And not just that they panic themselves, they start to spread that panic. They're telling their friends, family members, and now all of a sudden, everybody's starting to get worried. So that's the kind of environment I'm seeing right now. So I think we should talk a little bit about the expectations. If I were to ask you how good the markets are, generally speaking, what are you going to say? I mean, do they produce 20% return per year, 15%? A lot of people lately think that they produce anywhere between 15 to 20%, which is simply not accurate. The average is about 8% over a long period of time. And, with dividends, maybe 10%. So certainly not 20 or 30%. Now, in last 2 years, market has already given 30% each year. So what am I expecting for futures? It is possible. It is absolutely possible that we may have few negative years. Is that going to be 2025? I don't know. But could it be 26, 27, 28? I mean, shoot, you guys remember that 2000 crash? From 2000 to 2014, what was the return if you adjust for inflation? Nothing. Nobody made any money in those 15 years. So some of you guys who are, let's say, in your 50s or 60s, and you are one of those who are taking all these risky bet and playing all these lottery stocks, and you have the expectation that the market is going to go crazy, and you're not doing anything to protect your portfolio, you're not thinking about diversifying, you're not thinking about the fundamentals, guess what? You're walking into a trap, which can be very, very damaging in 2025. Look, I would suggest first come to the terms. It is possible that we run into a market that might not give any return for next several years. Would it be 15 years, 20 years? I don't know. It could be as little as 1 or 2 years or 3 years, or few months. Lately we have seen for last several years, our recessions has been getting shorter and shorter and shorter. And more importantly, we are having them less often, often, often. And that's why this bubble keep getting bigger, bigger, and bigger. So please pay attention to that. At least do something to protect yourself. Another problem I'm seeing right now is when markets goes down, people are selling their good companies. The same person who was giving me a lot of advice about why Amazon is such a great company, it goes down by 5%, they're selling it. Why? They're getting affected by news. They're getting affected by short-term volatility. So avoid that. If you bought something, I'm sure you bought it for a good reason. Go back to the fundamentals, think about why did you buy them, and then have some patience. Over a long term, you're going to do just fine, as long as you are paying attention to the fundamentals. And that's what we did in the meeting, right? We looked at so many fundamentals, and then we also compared it to all the hype. So looking at the fundamentals always help. Now, what about the market in general? Is it overpriced? Sure, it does look like overpriced right now. I think the forward PE right now is 22. That is a little bit on a high end. I'm okay with 16, 17 forward PE. 22 does get me a little bit worried. And then we obviously know that yield curve, that has been historically proven to be very accurate, is not in our favor right now. But are we going to? Seems like all kind of numbers are not proving to be accurate in 2024, 2025. Why? Because there's still a lot of money floating around. People still have a lot of equities in their home. People have high bank balances. People generally are still keeping their jobs. So panic hasn't really settled in. So I'm not really worried too much that things are going to super crash. But when these things happen, they happen super fast. They will happen like with matter of a week, if not days. So we would have no time to prepare ourselves. That's why I'm posting this video today, that you take the right steps to prepare yourself. Some issues are there. For example, a lot of great companies are missing earnings. We thought that capex cycle is over and people will stop spending on capex and they'll be focusing more on generating returns from AI. Well, they're starting to generate returns from AI, but capex cycle is still there. People are still spending a lot of money in capex, so that hasn't stopped. And then on top of that, the new president is talking about putting tariff. We already have sticky inflation, and then rates are not dropping anytime soon. Seems what if the rates start to go up? The moment the rate goes up, I think market will go into panic. Somebody mentioned on the group the other day that all we are looking for is one bad news, and that can present opportunities for a lot of discounts in the market. So I agree with that. I mean, it is possible. Our economies are interconnected. When, for example, when Japan decides to sell stocks in the United States to take to book profits, and because their interest rate is going up, that does impact us. I mean, we saw that happen a few months ago, right? That was a big panic. I think market went down almost 8-10% at that time. So those kind of things does impact. The question is, do we have cash ready at that point to take advantage of it? Unfortunately, most people don't. So I think in the next maybe months or years, there will be some huge opportunities to take advantage of that because markets are super high. So if I'm putting all my money in risky bets, then I would not be prepared to take advantage of those great discounts. So I would take a moment and figure out, who am I in 2025? Am I a trader? Am I a lottery picker? Am I retiring anytime soon? Am I looking for income? Am I looking for growth? Do I buy and hold? Do I only buy when market is all-time low? Or do I sell when I make some decent profit? Do I believe in mutual fund, ETFs? Do I believe in commodities? When do I buy? When do I sell? Do I come up with my own thesis? Do I follow other people? Knowing what kind of investor you are is going to help you figure out your plan. If you don't know answer to these questions already, then please sit down and brainstorm with your family members, with your spouse, and figure out who you are, what are your goals, how long you have to invest your money, how much time frame do you have, what's your risk tolerance, how much risk you can take. Talk about all these things. I think the best advice you're going to get is from your family. When you sit together, you figure it out together. I think you more than likely you're going to arrive at a better answer. So I'll talk about what I am doing in 2025 a little bit. So maybe you will say, hey, yeah, these are all great advice, but Deepak, what are you doing, right? So I don't mind sharing that with you. And I talked about it at the discussion call as well. Number one, I'm going to avoid buying too much. I'm not buying too much. I'm going to buy some selected companies, and I'm dividing my portfolio into 50-50. 50% of my money is going into stable companies that I believe will give me decent return, and there's no chance of them going out of business. They'll be around for many years, and they give me decent growth, and I'm happy with that. Now these are the companies that are more than likely not going to give me 30-40% return. But if they give me 15-20% return per year, I'm okay. Like I said, markets only give 8-10%. So if I'm making 15-20, I'm very happy. So half of my portfolio in those kind of companies. Other half, I'm going to put in high growth companies. Now, not just lottery companies. These are high growth companies. That means they already have sales, they already have margins, and they can be profitable if they stop doing something. For example, some of these companies could just stop doing sales and marketing and their profits will explode. Or maybe they stop in CapEx and their cash will explode. I like those kind of companies because at least I have some predictability. At least I know when they're overvalued. So when they're overvalued, I stop investing them. When they're undervalued, I start buying more. I'm not planning on selling them. I don't really sell and buy. I don't believe in that. If I like the company, I want to buy it every opportunity I get, and I hold on to it for a long time. So that's what I'm doing in 2025. I don't want to focus on hype stocks. A lot of people buy these hype stocks without really truly understanding those companies. Or they waste a lot of money in options and all kind of crazy investment styles basically out there, and they're crazy to me because I don't understand them. Maybe you do, and you can do that, but I would rather focus on clarity and have a clear purpose and have a clear direction. Where am I going? So if you don't have that clear purpose and clear direction in 2025, there is a chance when the panic comes in, you are going to sell and you're going to lose a lot of money. Or for that matter, maybe you pick the bad companies, and in that case you will lose a lot of money. So my goal for 2025 is to look for more stability instead of speculation. That's where my focus is going to be. So, um, like I said, I'm going to combine high risk opportunities with some stable investment. So I have that mix of those two. Then I will have safety and huge potential. And like I said, then on top of that, the expectation. I'm not expecting markets to go crazy high. I'm not expecting to make a 30-40% return. I know many people do. If I do 15-20%, I'll be just fine because I'm trying to compound it over long time. So another thing is right now we're seeing that markets are down a little bit, markets are up. So some people, what they do is when markets are down, they get worried and they start selling. And market starts to go up, they feel that market is really good and they start investing. Both are wrong. So what I do is I just simply dollar cost average. Why? Because when markets were super down for 2 years, at that time I could take a risk. I can, for example, I can decide to go in any company, and well, as long as it's a decent company, it has some good growth and the financial looks stable. I shouldn't really say any company. I'm not gonna go something that is going to crash or anything like that, but it's a decent company. Then I can take more risk because those companies are already undervalued. They've been down for a couple of years. Then next year, more than likely, they're going to do very well. But when companies are all-time high, I have to be very careful where I put my money to, because if I make a mistake, that can be very, very costly. So the goal for 2025 for me is dollar cost average over the long term into some great companies. And like I said, I'm not looking for 20, 30 companies. Definitely less than 10. That's about it. Cut as much expenses as I can, build some strategies around building some cash, so that way when market goes down, I'm in position to take advantage of that. I would have a line of credit in place. I will have my business set up to be able to take a line of credit on that. Wherever I can get the money when the market crash, I'm preparing for all that. Now, that brings up an interesting topic. Many of you guys probably don't have a business just yet. I would strongly urge you to take a look at some side hustle and set up a business credit. If you need help with that, you can certainly reach out to me. For that matter, even people who don't live in the United States, maybe you're living in India, Bangladesh, Pakistan, or for that matter, anywhere else, United States welcome anybody doing business in this country. So you can always set up a business here, even if you just only buy stocks with it. You can do that, and you can use that income to establish your business credit. So anyhow, you get my point. The idea is whatever you can do to be able to secure cash when you need it, when the market crashes, is important. Now, does that mean that I don't invest? Of course not. Like I said, I'm still investing. I'm not counting on doomsday or anything like that. I'm not trying to tell you that you go into a panic mode or whatnot. All I'm saying is figure out what your objectives are, figure out what your risk tolerance is, figure out what your goals are for 2025, and make your decisions accordingly. So I think if you pay attention to all the fundamentals that I just talked about, you'll be like, oh, we're not really investing that way. We're just investing blindly into whatever that has come to our attention. So please be very, very careful. I would say don't hold on to anything just because you like it, just because you work in that company. Those can be very, very risky bets as well. It's very important that you diversify and you look at different asset classes and look at the valuation of companies. At the end of the day, fundamentals matter. So whenever a particular company, uh, stock is trading at way higher than the fundamentals, there's a good chance that will go down. So you kind of keep an eye on that. Extremely important. A lot of time when markets going to crash is people are simply going to sell, and that's why the crash happens, because you see Amazon going down by 10%, 20%, and then you sell, right? So I would say whenever you're thinking about selling, at the bare minimum, please pull up a financial statement and take a look what has really changed. And if nothing has changed, if financials are still strong, then maybe it's not a bad idea to hold on to that particular investment. Why? Because even if it's overpriced and you sell it, then you have to worry about buying it back again, and you may not get that opportunity. Maybe you're worried about your job that time. Maybe you're dealing with some sickness in family. Maybe you have to travel. There's so many things that can stop you from going back into that company. That's why the general advice for many, many years has been always stay in market. So as long as whether it's an ETF or if it's a good company that you believe in, you're better off holding on to that company for a long time. And that's what Warren Buffett does, right? He holds on to companies for a very, very long time. He has a very specific reason why he gets out of the market. For example, I think somebody asked me the question the other day that Warren Buffett has been selling the his stocks, right? He sold out Apple. So why is the market not crashing? Is Warren Buffett losing it? No, he's not losing it. He's a pretty smart guy, and I don't think he sold it because he was expecting market to crash. That's not what his thought process is. It's pure math. His basic formula is when total GDP the correlation between total GDP and the total market cap is not in balance. I think he has certain number there, and when those are that number is not matching to his satisfaction, he gets out of the market. So obviously he's not 100% out of the market, but he has substantial cash position right now. But that's his math. Think about it. Warren Buffett can't go and buy small companies. If Warren Buffett needs to invest money, he needs to invest in a large company that can take that kind of capital. Which company that you know of right now can take his capital at a discounted price? I don't think he had that many choices. Most companies are overpriced right now because market is all-time high. So that's the problem. He just doesn't have an opportunity. I'm sure if he finds himself a great opportunity, he will jump in. But that's his restriction. A lot of smaller companies, there's still opportunity. They're still growing at 40, 50, 60%. They still have huge margins. We just got to find those. And for us, those companies are just fine. We don't have to necessarily follow Warren Buffett path. In matter of fact, we don't have to follow anybody path. Like I have said many, many times, that each one of us needs to figure out our own path. We need to have one-page document that talks about what our plan is and then execute that plan. Just like what you did in your high school, in your college, or perhaps at any other project that you're working on. You come up with a plan, you come up with the goals, and then you try to execute them. I don't know why people don't do that for their own finances. So for 2025, maybe take my advice and at least write it down and figure out what is it that you're trying to do. I think once you do that, you get a whole lot of clarity around that. Okay, so I'll leave you with some basic tips and then we'll call it a day. Number one, try to avoid FOMO into anything. Fear of missing out is a big problem. A lot of great people who are great investors always make this mistake. They always either panic sell or they panic buy. So always figure out, why are you buying that? And for what price are you comfortable with? Who determines the price? Well, you do, not the market. Because if something is overpriced, you don't have to buy it. You're the one making that decision. Who sells? You do. But oftentimes when I talk to people, people sell because somebody else is selling, or people buy because somebody else is buying. That is a mistake. You should be doing what you want to do. Another problem I'm seeing quite a bit is overconfidence. For example, when people see a short-term gain, on a stock, they think they kind of figured out the market. Trust me, you go to any financial expert, a pundit who has a long history. I'm talking about some older people who've been doing this for many, many years. One thing they will tell you, that there's so much they don't know. Because the more you know, the answer would be is there's so much you don't know. There's no way anybody can know which direction market will go, which company will pick up, which company won't pick up. I think most of us, what we're trying to figure out is how do we reduce our risk. So I think the better you get at managing your risk, the better investor you will become. So please, if you got lucky, you made tons of money. That's great for you. I welcome you. I'll be happy to reduce your capital gain taxes if we need to. We can talk about all that stuff, right? That's great. But just because you got lucky doesn't mean that will happen in 2025 as well. So please think about some realistic expectation as to what is going to happen. If you're thinking about 2025, don't think of it like a sprint. At least, maybe when markets become a little bit more reasonable, you can treat it like a marathon. But for now, you got to treat it like a sprint. You got to pay attention to what's happening. Just take one day at a time and execute on your plan. Consistent execution, even if you made bad mistakes, is going to give you better return than you executing on somebody else's plan. Stick with your plan, avoid distractions, you'll be fine. So anyhow, those are the kind of things that we talked about on the call, and I hope I covered them all. Maybe not. I don't remember everything. I think it was a long call, like 3 hour long call. So maybe there was other matters. But once again, let me remind everyone that my name is Deepak and I'm a tax code advisor. I'm not an investment advisor. I'm not here to tell you what to buy, what to sell. So please don't get confused. But if you are looking to file your taxes, you want to figure out how to reduce your tax bill, then I am your guy. I help clients from all over the world who have some business in the United States. I can get that done for you. So please reach out to me via taxcodeadvisors.com and I'll talk to you next time. Thank you.